Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Presently, the Australian dollar has extended its climb for the third consecutive day as another strong domestic release is added to the case for a tighter monetary policy. Household spending rose by 1.1% in July and is now 7% higher over the year, showing consumers remain surprisingly resilient despite 3 rate increases this year. Combined with this week's stronger inflation reading, the spending data leaves the RBA with little room to relax its stance. Meanwhile, persistent US inflation provides some support for the US dollar as well. Core PCE, the Fed's preferred inflation gauge, remained elevated at 3.3% annually, while headline PCE held at 3.7%, keeping the prospects of another Fed rate increase firmly in play. The focus now shifts offshore with Fed Chair Kevin Walsh's Jackson on Hole address on Friday. Technically, though, the RSI still shows divergence. I'm getting very cautious of this uptrend and could see a rejection somewhere around the region of 72.35 or around 72 cents. If so, this trend is also overheating slightly and a pullback could be seen back to the lows of 71 cents and reassess from there. Moving on, the euro is holding around the 116.55 area against the US dollar, with neither currency finding enough momentum to take control after pulling back from its recent highs. As I mentioned, the persistent US inflation provides some support for the US dollar. With all eyes on the Jackson Hole Symposium on Friday, the market will be keen to see what Kevin Walsh has to say. Technically, though, we are breaking down here and therefore could see a move away from 117.20 where this cap is after these two negative candles and look back towards the region of 115.70-75 and reassess in case we get a bounce. Turning to dollar yen, well, the market is grinding higher, but I still am a little bit concerned that we could see another down test. And if so, the market will look towards the bottom side of 157 to 156. Expectations of tighter Japanese policy remains elevated. However, keeping September firmly in focus could see a rate hike. Friday's Tokyo inflation and employment figures will provide another test of that outlook, while the yen remains vulnerable to renewed pressure if the Bank of Japan fails to meet increasingly hawkish market expectations. Sterling is also showing a very heavy drop here, and as you can see, could pull back towards the region of the lows of 135 and reassess. Technically, we are breaking down, so further weakness is in play. Turning to gold, the market is also weak and also retreating from its 3-month high, as further evidence of stronger inflation coming through. This could put a little bit of a dampener on the rally and look back towards the mid 4,550 and reassess. And wrapping up with oil, the market is still somewhat wavering around this $80 mark. Keep an eye on the technicals, they may provide another downward test towards $79 a barrel and then expect to see a recovery back to around 85 to 86. Well, that's a wrap. Thank you for joining me, and as always, look out for the intraday report. I hope you enjoyed a great start to the day.